It, it was working. Oh, thank you, Myrene. I forgot to hit record. So anyway, if you're watching the replay, we just hit the record button, and we're just diving into the news, talking about the risk on assets. Let me see. Is the AI companion on? I forgot to do all of that, and because let's see, that is running. Okay, good. So basically, yeah. So we're talking about the fear of risk on assets across the board. I think that with anything, here's the thing: we saw more liquidations than the COVID crash and the FTX collapse. Both were amazing buying opportunities and market bottoms. Flushed out a lot of leverage, $2 billion. World, it's the record. It's never been that high, and we don't want to celebrate that because it means a lot of people's hopes and dreams got wrecked. But if you're playing with leverage, especially high leverage, that's the game, and they're going to do that. They're going to move price around. It's too tempting to go after that liquidity and the money. So at some point, we will be moving over into teaching Coinbase futures when the market top is approaching to play the way down, and we have another bear market strategy that we're telling people in M3 about. And some of you saw the presentation with Vadim on the yield farming. But anyway, for this class, so we're going to talk about what's happening now, the indicators, what's going on in the markets. So let's see. Market had surged on the news that U.S. tariffs on Mexico and Canada would be delayed by a month. And yes, is that not true now? Let's see. I guess, but delaying it for a month is just kicking the can down the road. That's going to be interesting because our market cyclists experts are suggesting that the next daily and weekly cycle low will be late February to March. And that should be a bottom in a major rally. Typically, when the daily weekly cycle lows coincide, major rally. If we're kicking the can down the road on the tariffs, and then next month we say, all right, now it's your tariffs are on again. I don't know how that's going to play out. Very tricky, right? Very hard to dictate market timing right now from news and other events. But as you know, I always say, show me the charts, I'll tell you the news. So we'll see what the markets are telling us here in a minute. All right, U.S. Conference today, 2:30 to reveal U.S. digital asset policy details. Okay, that's interesting. What does that mean? Trump administration plans to reposition America as a leader in digital assets. This should be bullish. It's a very manic market here. Do we go up? Do we go down? Nobody knows. So, preparing for a big day. So yeah, you guys be standing by for 2:30. I mean, I imagine this can only be bullish because President Trump has already said he wanted America to be a leader in digital assets. Questions are which ones? He's already indicated there will be no taxes on U.S. based cryptos. Some have already run, like XRP and a few others. Some have not run yet, like Hedera and Algorand. So those are a few to keep an eye on. We'll pull them up here today, see what our signals are telling us. All right, so after bouncing near 91.5, gained over 10,000 in a single daily candle. And progress halted up when it emerged that China was retaliating. Yeah, so there's the trade war. It's just the very early innings of this whole thing. And suggesting another volatile day today. But I've seen a number of people come out on Twitter saying some really obscure and strange things like if Bitcoin isn't at 120,000 by the end of the month, I'll eat my underwear or something. What was it? The guy said he'll sit on a hot dog for 24 hours and then and I won't tell you. And then eat it basically. So I don't know why anyone would say that. 120,000 in February. Somebody's saying this week. So let's see. All-time is February is quite normal, correct after such a strong bounce, volatility through the roof. But as long as Bitcoin remains above 93K, a new all-time high is lately. Bitcoin is at 99K, so that's good. And so they're also showing these buy blocks here, which are the same as ours here. This is where we know to buy things. If you're not a crypto mastery user of the signals, we have these same things. The signals, we basically visualize where the buy orders are, and I'll show you a great example on Solana, where it came right down to the buy blocks and bounced up significantly. And then these red boxes here, we'll show you, we have them on our charts as well. These are sell blocks. All right, I've got these moved all around in the wrong order. Let's see here. We can see the sell zone. This is where all the sellers are lining up. This is origin token getting down toward the buy zone down below. Going to Bitcoin here, sell zone. Look, this is why I'm saying I'm not bullish until we're above 110K. There's still a ton of sellers, short sellers and sell orders up in this range. Sell limit orders, people that want to sell at the top. The battle continues, you guys. Now, we do need to redraw our parallel trend channel a bit, which has been known to happen. New information, new decision. And so we don't have that steep angle on it anymore. It's really looking more like this, but we're still in an uptrend technically. So the key is we need to not close below this trend line. Now, there's another trend line that has broken that's somewhat scary, and we need to watch that on the weekly time frame. So we'll pull that up shortly. And we'll see. Let's get the news out of the way, shall we? I'm ready. I'm over the news already. So let's see. Others suggesting that Bitcoin would investigate it's a strange word, investigate a new short-term range as a result of the volatility. And that could be what I was just sharing with you, this short-term range. And is this? Well, it's just a parallel channel. I was going to see if there was a flag building there. At any rate, we needed to break one way or the other. After such an event, it feels logical for me to expect some sort of new range to form. Yeah, I mean, the market makers generally create the new range. And, sometimes that's then moving up into a new price range on a big major move or to the upside or downside. Funding rates add to rare Bitcoin bull clues. That's interesting. Let's see what the funding rates will tell us and what that means. These are the funding rates for margin traders, how much it costs to borrow money on margin, and the higher the demand, the higher the rates. But these can be clues also in price direction. Funding rates across derivatives markets, a contributor to on-chain analytics, crypto quant cause for celebration. These on-chain analytics are generally not tradable in the immediate term. The charts will tell us the story, but interesting to hear what the on-chain metrics guys are saying. That's interesting. Bitcoin dominance nears 4-year high. We haven't looked at Bitcoin dominance in a little bit. Let me just see what they're referring to there. Okay, wow. So Bitcoin dominance spiked all the way up to 64% yesterday. That's interesting. I guess people just not trusting these altcoins, but it's fallen back down again. So that headline, yeah, I mean, that's not true. The Bitcoin dominance was in the 70 percentile range back in 2021. And that's when we're kind of at peak levels. And so we do want to see Bitcoin up in those levels and then start to come back down, because that means money's flowing out of Bitcoin somewhere else, and generally other places, meaning altcoins, Ethereum, Solana, and the other alts there. All right, funding rates, as this person noted, had printed a key bull signal during the trip up. Let's see, the 7th time this year, the Bitcoin funding rate has turned negative, with the first such instance coming in April 2024. Generally, that means that prices are about to go higher. So in this chart here, let's look back into April of 2024, April, May. Yeah, the funding rate's going negative, but it continued into May, and then doesn't really, it signified a short-term spike here in July, and then in August. So the signal here suggesting, wait a minute, what am I doing? No, I'm completely off. This is last year. So, but these usually signaling a price to go higher. Where we are now, February of 2025, funding rates have gone negative, signifying potentially a rise in prices. But that's not tradable. That's not actionable information. It's interesting and useful to create the frame around where we are. So are we on a risk on or risk off environment? It's hard to say. I think we'll know more how the markets are feeling after that conference here today. So, but yeah, this is kind of suggesting the risk on asset fears, Trump tariffs leading to mass Bitcoin crypto liquidations. It's going to be a volatile year, you guys. And, they could come out tomorrow and saying, all right, the strategic reserve is in place and we just bought $1 billion in Bitcoin. So we can't read too much into the news. We want to read into the charts, which tell us how the markets are reacting to the news. That's the important thing, because the markets are going to move around and up or down. So this one's saying, is the bottom in? Bitcoin derivatives point to limited price downside. So there's no agreement, which is actually pretty good. I don't like consensus. Consensus is usually wrong. Bitcoin bull trap. Let's take a look at these. I don't want to spend too much time on the news, but these are relevant. And I'll close these other ones down because we got a million things going on here. Is the Bitcoin bottom? And Bitcoin derivatives point to a limited price downside. All right. Why and how so? Let's see. Suggest bottom is in. They're saying, however, investors fear that could limit a recovery beyond 100,000. Yeah, it's certainly interesting that this 100,000 number is such a hard one to get past. Big round number, big round number. 50K, we had a tough time around there also. And other big round numbers, 200K will be another huge battle. And my model suggests we could hit 200K this year, end of the year, potentially. But I wouldn't expect much more than that if we get there. 150K, I think is more likely. But we have to break this 110K level and close above it. So, yeah, cryptocurrency market experienced a surprise 17% correction over the weekend, bringing the total market cap down to 2.61 trillion. Did it is that right? Well, it spiked down. Remember, total market cap $3 trillion was that magic number. The high price of Bitcoin not important. It had nothing to do with the price of the top of the market last time. It was $3 trillion on the total market cap, and that's when the programmatic selling kicked in. You can see that right here. I can see that right here, right there. $3 trillion to the nose, almost to the dollar. The market peaked, total market cap, and then the selling begun. And of course, since we're in crypto mastery, our signals nailed it. And our bear market signals right here, bearish engulfing candle, bearish ERI, and then our other signals also aligned here. Do you guys see this? If you're new here, this is our bear market red alert. Our signals called it. They nailed it. And you can't even see that line there, but let me draw something around it so you can see this. So, and then I have another chart showing this. So basically, all right, let me do it this way. Right here, see this, you guys? The bearish early reversal indicator. That's one of our flagships in the Crypto Mastery Signals. By the way, stick around. We do have a new, if you don't have the Crypto Mastery Signals, we're on a membership drive. We have a free trial and then a 20% off discount today. Okay, so you're going to want to have those. And when we get into it, I'll show you why that is. If you already have them, you probably have like a lifetime deal or something else. And the prices did go up recently. However, for a limited time, you get a free 2-week trial and then 20% off, only $79 monthly. And you're going to get 10 of our best indicators that we're going to talk about today. So including our bear market signals that correctly call the market top. And here, see this red arrow, this our trend strength indicator going from green to red and below 80. When these align, you guys, and I'm going to show you our trade success checklist, which makes it easy. Well, I won't say easy. It makes it much simpler to trade these things. It gives you a cheat sheet because when all these align up and they're red, the signal line going red. And by the way, if you're new here, our programmer partner Joe, he's created these amazing indicators. Each one is like multiple indicators of the other things. So if you're using RSI or MACD or any of that other stuff, it's not enough. Everyone uses that. You don't have any edge. These give you an edge. And when we see confluence here, we see very strong signals. The new RSI Pro showing strong bearish divergence. See these two red points there? Sure enough, that was the market tops right back in the last cycle. So, and we've also seen that recently. When these signals started to align, you guys remember when we had our early reversal indicator here, hence the name, means our markets are about to reverse. Then and then we saw these other signals going red. I was like, guys, we shouldn't be going down here. We should be rocketing higher. The narrative was very bullish back in this range. And I said, but our signals are lining up bearish, and we have to prepare for that. Sure enough, we saw like a 20% dip back here, here, and here. How valuable could these be? Just these arrows. And if, by the way, if you're a more sophisticated trader and you're wondering what the hell the arrows are, the real signal, we've just visualized it to be easier to read. This is the actual early reversal indicator here. But nobody wants to look at that. This was an accidental discovery when we were going to deprecate an oscillator that Joe had created. And I noticed that when the oscillator got down below 3 and above 20, see right here, 3, or down below to 0, and then above this 20 line in 3 time periods, very likely to continue on for the full oscillation, so hence the early reversal name. Similarly, on the bearish side, if it gets up to the 100 level or above 97 and below 80 within 3 time periods, you can see these red lines, also early reversal signals. Look at that, right at market tops, right at market bottoms. And when in use confluence with these other signals, they are unbeatable, in my opinion. Okay? No matter what else you're using, you need to add these in your arsenal, especially in the next phase of the crypto bull run. Now, what is interesting too, right here on the total market cap, on the daily at least, we are oversold on the trend strength indicator. So, if and when we start to see a bullish ERI and a bullish TSI, and these start to align, we'll know it's time to get in for the next phase of the pump. All right, but we'll come back to that. Let's see. Any questions, you guys? I don't see any questions. A lot of this was a review for M3 members. So we'll try to cover some new stuff here today. But repetition is the mother of all learning. I know that some of you in M3 still are not proficient in the signals. So I want to spend a little bit more time on and evaluating the signals today once we get through the news here, because you need to know how to use them. And it's really not that hard. They're simple. All right. More tariff threats. Bitcoin derivatives performed well despite market volatility, et cetera, et cetera. This, I think, is the funding rates here. Perpetual 8-hour funding rates have gone negative, generally bullish. As we said earlier, it indicates a reduced demand for long, long leverage positions. I wonder why, because the leverage traders got largely wiped out over the weekend. And why that's a good thing is we can trust the movements as more based on spot buying and not these degenerate gambling margin trading day traders. Not that there's anything wrong with that, but it's a dangerous game. All right, so let's see. That's about it. Liquidations reached, wow. Crypto market liquidations likely reached 10 billion. I heard 2 billion, and that was on one exchange maybe, but 10 billion, that would be big. That would be huge. And that would likely signify the market bottom. I mean, that's, remember the COVID crash, the FTX crash, huge overreactions, flushed out all the margin traders, and then everyone said, hey, this is pretty cheap. It's time to be buying. However, is there a Bitcoin bull trap? This is why when in doubt, stay out. This battle for 100K is only going to be sort of won or lost above 108, 109K. Otherwise, the market makers are making too much money at this 100K level. They push it up. All the long traders go in, 10, 50x long leverage traders, and then they liquidate those guys, and then they all pile in on the short side, saying, because a lot of people think we're going to 70K. Some people think we go to 84K, 70K, so everyone goes leverage short. All their confirmation bias kicks in and they load the boat and then they pump the price back above 100. All this zigzagging is the market makers and the whales getting wealthy. That's it. So, Bitcoin bull trap. Watch these price levels as Bitcoin price risks the $90,000 retrace. Why is that? Saying just what I said. It's not about the tariffs. It's about how can we pretend. We'll use this as the reason, the catalyst for us manipulating price. And it's interesting how it happened over the weekends where Wall Street was closed and couldn't really participate or do anything. So at any rate, I'm not going to look at other people's Fibonacci levels. We'll look at that on our own chart. All right, that's enough of that. The two more news articles, then we'll get into the charts here. Ether must hold 2.7. Ether took a big dump yesterday. And by the way, I did want to go back. I had pulled up originally total market cap. Wow, you guys, look at this. We did total market cap went down and below 3 trillion, all the way down to the 2.8 trillion level. If I didn't see it, I wouldn't believe it. That's insane. Oops, not that. We have, and this, we was looking like a bull flag breakout, by the way, and now we have to sort of reevaluate this and say, this, it's not, let's look, it's now a wedge pattern. Still a bullish, broadening, descending wedge. We just have to move it over a bit. However, fortunately, we held 3 trillion. We're back above it. Look at this, though. Our order block detectors, though, also said, if you were watching this, this is where you go in and buy. This is where all the buyers are in aggregate. And had you gone on a buying spree right down in this range, you would have done very well. And you'd be up potentially, 12, 13%. Call it 15% at some point as of yesterday on the bounce. Those bounces can be great. We're going to look at Solana and some of the buy recommendations I was putting out in M3 Active Trader between 175 and 200. Solana now trading, I think it was, let's see, why system disconnected there. On this screen, I've got monitors over here, you guys. And Solana at 215. So that was a great, some great buying opportunities on Solana. Just saying. I love these big capitulation dumps for buying. And anyway, there's a lesson in there we might talk about why it's important to take partial losses on the way down so that you can buy deeper dip. And let's see. So talking about 2.7 on Ether, let's see. I guess we can go over to Ether and pull that up. Haven't been watching ETH too much this cycle. It has not been performing well. Although it's interesting that the Trump team, so I've been hearing, has been buying a lot of Ether and not doing a very good job of it, the timing wise. Let me get rid of this black squiggly line here that I thought would play out. Big sell block on Ether. This is money flow on the over the weekend. This, if it's a bull flag, bull flags don't take this long, you guys. This is still a downward trending channel. ETH needs to reclaim 3,200, pretty much 3,400 to have any hope of really going higher. Other than that, it's still in a downtrending channel. And the reason ETH isn't doing well is that they're not generating any fees. In the last cycle, there were the NFTs, and then there were meme coins on ETH, and they were generating tons of fees on these things. Now nobody cares. Nobody wants that stuff anymore. They don't want to trade those, pay those high fees on ETH because Solana is so much cheaper, and everyone's going out and buying Solana meme coins. So ETH has been bleeding out for those reasons. Also, there's not really that great of a use case for ETH. Other than a platform for the layer twos, which are faster, cheaper. So it might turn into ETH as just sort of a playground for these other companies. But the other issue is that many of these other blockchains are EVM compatible, Ethereum virtual machine compatible, meaning that the dApps, the decentralized apps and layer twos that run on ETH can also run on these other blockchains. So less need for Ethereum. Well, Polkadot is one. Some really interesting things I'm hearing about Polkadot. It's been kind of brewing, and their new yield farming platform, StellaSwap and Moonbeam, which we did a program on. And those of you in Retire Rich, by the way, we're going to have Vadim join us this Thursday at noon to talk about StellaSwap and how you can earn 20% potentially per month, even in the bear market with that. So anyway, bear market strategy is kind of interesting to start thinking about. All right, 2.7 deeper correction. Yeah, I think ETH is going lower. And so I think in the long run, it's worth having some ETH and buying it lower. But honestly, the buy limit orders I would be putting on ETH are down here at 2,400, 2,250, and 2,000. This is where I'd buy ETH. I wouldn't buy it up here. There's no buyers. There's sellers right up here, so there's limited upside, and sellers at 4,800 on ETH. So there's that. Let's see. Report liquidation surge to ETH price levels. I don't think we want to get too much farther into ETH. You guys can hear me, can't you? There's not a single chat today. Somebody at least let me know that. I assume you would have told me if you couldn't hear me. Hey, Todd. Todd's here also. So, all right, you guys, let's move on. I want to get to the charts here. Last news article, Bitcoin bull trap. Watch these Bitcoin risks. I already pulled that up. Doesn't really say why it could be a bull trap. And I don't know. This is kind of boring news. Maybe let's check out Crypto Panic and just see what's maybe more news. All right. Thank you, Todd. You guys, well, I understand why you're quiet. Maybe on a painful weekend and licking your wounds, and certainly understand that. So this is interesting. Founders say liquidations from tariff-led market sell-off shows DeFi is working better than TradeFi in terms of the crisis. That's interesting. I think we do want to keep an eye on DeFi. Here, Eric Trump recommends buying Ethereum after the collapse. Clearly, he's not in our class and not watching these charts because there's nothing bullish about, well, all right, I sort of eat my words here. I mean, prior resistance, 2,700 was a prior support resistance level. And right in here. So flipped as resistance once, twice, three, four, five, not real quite five. The fifth time, you guys know in M3, I always say breakouts happen on the third or fifth attempt, generally on the upside or downside. So here we have 1, 2, 3, 4, 5, give or take. This one didn't quite get there. It's not exact, but then it broke down on the fifth-ish and then try to break above. Once, see, once, twice, three times, four times, five. If one, two, three, four, five-ish, this one didn't get quite high enough, broke above. Point is, this now holding 2,800, trying to hold, but this big sell block, this is money flow. This is our. Let me pull up the free check trade success checklist, guys. So go over if you don't have it already. Go to moonstream.io free checklist, and you can get your hands on our free success checklist. If you guys aren't using this, you need to be using this, especially if you're new. Once you do it a dozen times or so, you'll do it in your head. Might take a few times longer for some people. I mean, but shouldn't it's not difficult. Let me download it to get the interactive version. And okay, good. We've got the interactive version, and then I'll open it up. So you do need to open it in like a PDF reader, and I'll show you why we have this custom coded so that you can click on the boxes. It's interactive. It gives you a trade success score. So now I have a trade success score of 1. And also on the negative side. So if we go down to the bearish setups down here, short bearish trades, and we look for these bearish. Okay, I do need to add more on the bearish side. I didn't get all of them in the money flow signal that we have on the bullish side. These buy blocks, the corresponding sell blocks are money flow. So if buy blocks increase demand and buyers are pushing prices higher, what do the red ones signify? Sellers, big sell money flow. So basically, these generally are respected, and so this is not going to go away soon. ETH is going to bounce around, probably head lower. I think could be wrong. Depends how much those boys are buying over there and on the Trump side and their followers. And we're not going to get into politics here, you guys. So don't worry. Let's see. Anything else we want to look at? There's really no. You say no news is good news. There's not much news. People are licking their wounds here after the weekend. And by the way, to learn more about these signals, you can be skimming those here at cryptomastery.org. That should redirect over to the pro signals. Guys, these are what we use on all of our services and all of our clients. And you can read. Here's a good cheat sheet too on how they all work at a glance. So we'll talk about these today. And I'll just drop that image in the chat also. This was a study we did on Castwell a while back, so I threw it on the website. So our custom indicators, we have custom Bollinger Bands that are coded for crypto. If you're using off-the-shelf Bollinger Bands, they won't work. They're using the wrong standard deviation. Whereas ours are Bollinger Band Pro. When you see it cross the upper red line, we've color-coded these for bullish and bearish. When price goes above that red line, and if it closes at or above it, it'll print this vertical red bar, suggesting that it's time to start taking profits. This one pumped a little harder and then broke above it here as well, but you can see a sharp reversal afterward. So that's been very good back here, touching that Bollinger Band retrace. So people always ask, when should I take profits? We have two signals for that. One is the upper Bollinger Band, and the other one are those sell blocks that I was showing you on Ether there. Similarly, on the buy side, the buy blocks, these are where buy orders are lining up, that we've visualized where the biggest chunks of limit buy orders are on the exchanges. And so you can see these have been very useful. Back here, right at the midpoint of the buy block, Caspa shot up. And right here, dips down the buy block, shot up again, pulled back right in the middle. Midpoints of these buy blocks has been gravy for us. Setting buy limit orders right at the midpoints, and then boom, they run again. So, and then up top here, upper Bollinger Band targets, prior resistance, places to sell. On the bullish side, we have our rocket indicator. How many of you guys like the rocket? It's a pattern I've recognized for years. We finally coded it into an indicator, and you can see it here. It looks like a bottle rocket on the launch pad. That's why it's called rocket on the launch pad here. If I pull up where's that PDF? PDF. I'm not doing a good job at this here. No, there it is. So on the rocket side, it is, by definition, this thing, rocket on the launch pad here, forming at support at the 21 or 50-day EMA. A rocket is a green candle with a real body resting at support, a price wick below, and that closes at or near the top of the day. Very important. You can't have a wick up top. So what that suggests is the buyers were in control all the way to the close of the day, 7 p.m. Eastern, and the wick below signifies that price had gone down. Sellers were in control at one point in the day, and then the buyers regained control. So visually, you can look at it as you light the fuse like a bottle rocket. It shoots up in the sky. So therefore, we put a little rocket down below. These can precede fast upward price movements that typically don't last very long, but they're great for making profits. We'll get to all these here in a minute. All right, so we don't have a rocket there on that chart. I want to stay on task here. These signals here, the radar, multi-time frame radar. Guys, when the radar is all red, as it was the last few days, you don't want to be buying anything. And when the radar flips, some of them green or all green, that's when you can start buying. Right now, Ethereum, all red on the radar. Don't buy it. Simple as that. So there are exceptions, but for the most part, I would stay away from those. Similarly, our screener lets us look at up to our top 8 trade, our top 8 pairs. You can customize this whatever you want it to say. Interesting, Ondo is the only green in here. The rest of these suggesting don't buy them. These are based on our RSI Pro and Signal lines. Now, these can be a little delayed. This is kind of your safety zone, but this is your screener for your top 8 favorite picks. But we'll certainly look at Ondo because, as you know, that's one of our picks in M3 Active Trader and a good DeFi project to consider. Not financial advice. All right. But where were we? I was showing you guys this image. Where is it? I got too many things open here. All right. And then also the trend strength indicator. I showed you that. The ERI, this arrow here, representing institutional money flow, programmatic buying and selling. That's my theory. But either way, the ERI, early reversal indicator, hence the name, so good, especially in conjunction with the trend strength indicator going from red to green and above 20 down here. And the third one, so let's just do the trade success checklist so you guys really understand that. I know there's some new faces here. And so if you're considering a trade on this and you're looking at Caspa, and we were looking at this here, and we were back in this buy block here, we would say, all right, there's an ERI, early reversal indicator. Yes, we have that. So we'll go up here and check that. So right here, you see it's just pattern recognition. Early reversal indicator. Is there one? Yes, it is. Cool. You got a trade success score now of 1. 1 is not really high enough for me. I want to see at least 2 or 3 and generally higher. So looking over at the trend strength indicator, we see that went from red to green and above 20. We're looking right in here, you guys. And so that also green. So now we have, see that pattern recognition, green above 20. The trend strength indicator turning up above the 20 line and out of the green zone, which is oversold. This indicates a new bullish cycle where buyers are in control. So now, what is our trade success score? You guessed it. It's 2. 1, 2. There you go. Easy math. How many of you like math? Get over it. This is fun math. All right, so let's see. Let's one more. The signal line. Again, these are based on different algorithms. So we're looking for confluence, which gives us clarity and conviction and the trade and the confidence to make the trade. Signal line turning from red to green as well. Jumping over to the trade success checklist. Again, I gave you the link. Download this up above. You can use this with other trade setups as well, just not as good without our indicators. So now is the signal line green and printed a green circle? Yes, it is, indicating bullish sentiment change. A steeper slope indicates stronger momentum to the upside. Boom, right there. So now we have trade success score of 3. I am in this trade by now. Sometimes I'm in just at the ERI TSI, but if I have 3 or higher, I'm starting to buy that trade. So what else did we have print over here? We had our other trend indicator, which we had a key and a bell. And the bell signifies a buy signal, so that indicates, further upside on that. And then we had our RSI, relative strength indicator. You've heard of RSI, but ours printed bullish divergence back in this range. And so here is the RSI Pro showing a green circle, showing bullish divergence and the green line. So all you need to be able to know is green dot. Okay, you don't need to know what bullish divergence means. Now you've got a trend success score of 4, but actually because we had the key and the bell, the key says a new longer-term trend may be forming. The bell is our buy signal, and it kind of looks like Mario Brothers run out grabbing all the coins, right? So it's kind of a fun one. Now we're at a trade success score of 5. I'm doubling down on this trade by now. What else do we have? We have traditional patterns. Is there a bullish engulfing candle? All right. So over here, we had this bullish engulfing candle right when the ERI printed. That's why I took a screenshot of this because this was such a great looking trade. And boom, 6 on the trade success score. So we're in this trade now. And then what else? Is the price above the 21-day and 50-day EMA? And we're looking right in here. Yes, it is. It was just gotten back above the 50-day EMA and was just getting above the 21-day EMA. Boom, another check. So now our trade success score is like 7. Is the candle body above trend line support? All right, well, we could draw a trend line through here. So the answer is yes, above trend line support. If you drew it from here to there, you could draw several trend lines, but it was also so pretty. This was starting to look really good right in here. And then, so by buying into this trade, we can see what happened afterward. It started to go higher, and then we had a rocket. So we'll get to that here. Look at that. Then the rocket formed. That's when we tripled down potentially, and boom, right after that, it went up from 15 cents to 18, 19, 18 cents right in there. So basically a 20%, nice 20% pump, then pushed up to a sell zone. But when these align like that, it's gravy train time. It is almost, can't say 100%, but it's like 95% plus, you guys. And then up here, prices recently. Okay, so if now on the if the Bollinger Band touches the lower Bollinger Band, and we see this green bar, generally that's bullish. So this case we didn't see that. I don't think we saw that. No, but that's fine. We don't need that. Our score is 9 already on this trade success score. That's almost unheard of. Well, we don't even 2, 3, 4, 5-ish. I'm buying that and doubling down at 5, 6, 7 on the trade success score. So, but if you do see a big dump, I bet you we saw a dump. Let's look at this the other day, and let's look at a Bitcoin here, or let me turn off the screener on Ethereum, and I'm going to do this. Don't look at all this, probably going to make your eyes hurt, but I'll jump over to Solana because I bet you Solana had a Bollinger Band bullish signal on that dump. I might eat my word. Nope, look at that, you guys. Did not have to eat my words. Solana turning green on the radar on the daily, by the way, unlike Ethereum. So I'm going to just clean this up a bit. But look at this. Price came all the way down here and it went below that lower Bollinger Band into the buy zone, which was also trend line support right down to the 175, 176 level. I saw some prints down in the 175 numbers. But look at this. This is also a bullish signal. Why? Because it reverses to the mean, and we use a special setting in the Bollinger Band so that it invariably will reverse when it hits these. And Steve Nissen, the father of candlesticks, taught me this also. Generally, when the Bollinger Band touches on one extreme, it will not only go back to the median, but it'll go to the other side. So here went from the lower Bollinger Band to the upper Bollinger Band, buy, sell. Any one of these indicators could potentially be used standalone, but using them in confluence gives you a major edge. So go over to cryptomastery.org and check those out. And then the free trial offer. Guys, if you've been on the fence with the signals, now is the time to get them. Go over to the cryptomastery.org/free trial, and you can get signed up for 2 weeks free, and then a discounted, grandfathered 20% off, $79 a month. This is the best offer we've ever made. We're on a membership drive for 2025, and we want to help you guys. Why are we doing that? Because I know how powerful these signals are. And if you start making more money with those, which you will, then potentially you'll be interested in some of our other courses and like M3 Active Trader and Retire Rich, and potentially some one-on-one consulting and coaching, which I'm doing now. All right, radar, all green. If you are watching a chart and you have an all green radar, did we have one over there? I can't remember. I was so looking at the other signals. Where did that thing go, you guys? Sorry. Not all green on the radar, almost. Now, the radar, just so you know, many of you know, you can change this to different settings. So in this case, I have daily, weekly, monthly, quarterly. For my longer term swing trades, that's what I want. But sometimes I'll have it on 4-hour, daily, weekly, monthly. And in that case, sometimes that'll go green first and go earlier for those near term swing trades. Okay, but if you see it all green on that, all green is go. Similarly, all red, like with Ethereum, is when in doubt, stay out. So if we had had all green on the radar, that would have been another check marks. We don't. I'll talk about dynamic true range. This is excellent on the 1 hour, 4 hour charts, and sometimes on the daily. We did talk about the buy blocks, though. We're not done with Caspa here. This example, where'd it go? Over here. So on Caspa, we also had it coming out of the buy or the buy order blocks. See, that's why I use this example. The 10, a score of 10 is unheard of. And if you ever see one, I would I don't not financial advice. Don't bet the farm, but almost bet half the farm. But make sure you take profits on that pump afterward because I've seen when we have confluence with these, it's just such high probability trade. And then there's other things. Is price breaking out of the downward trending channel? We didn't see that. Well, we did see that on Caspa. Go look at that. Great example. So if this were the downtrending channel, okay, you can see that. Then right in here at that inflection point, it was breaking up, breaking out of the downtrending channel. I can't draw it on here because this is an image. But now we have a score at 11. You guys ever see the movie Spinal Tap? But it goes to 11. 11, huge number. So, guys, get that free success checklist. Even if you're only using it with these sort of patterns like moving averages and things like that. But let's take it a step further. I want to talk about the dynamic true range here on the 1 hour, 4 hour charts. These are my day trading charts that I pulled up. We're not doing a lot of day trading right now. And somebody was asking about it last week. We're not going to talk about that. Dangerous game. Session disconnected. It's been doing this lately. I have two or three. I've got all my devices connected. I've got my iPads, my phone, and this computer. So that's why it's doing that. What was I about to do here? I need a 1 hour, 4 hour chart, and I can reconnect all these as we go along here. Where did my 1 hour, 4 hour chart go? Stick around. I'm going to show you my market top study there, my USDT study. May not get to that today. That's part of M3. Let me do this, though. I'm going to load a 1 hour, 4 hour because I want to show you guys the 1 hour, 4 hour. I think I just took down the USDT dominance study, but anyway. On the 1 hour, 4 hour, we can see, by the way, we're in Solana, a downtrending channel, and we're not really sure what's going on here. Have some sell pressure at 240 and 250. That's all fine and good. Let's talk about Bitcoin, though, just because most people are familiar with Bitcoin. And we want to know what's going on with Bitcoin. A lot of sell pressure up in here on the shorter time frames, kind of hard to tell. If we turn on our dynamic average true range, however, this is used both as a dynamic stop loss, but also as an early entry and exit signal. So the other day over the weekend, the 1 hour chart was drifting through this big sell block and rejecting along here. The signs were there, you guys, for a week since back in January even. And then back here, Jan 25, rejected out of this on the 1 hour and then rejected here. What I want to call your attention to is see the dynamic average true range went to exit mode on Friday before the big dump. The signs were there, you guys. And on the 4 hour chart, similarly, we saw the price reject here also on Friday, right? And let me just slide that over. These are the sell blocks. Guys, it's like the Wizard of Oz, it's not magic. If you peel back behind the curtain, you could see the Wizard of Oz had all those gears and pulleys and things. It's the same thing. You need to be able to peel back the curtain and see what's happening. All right, so right here went to exit mode, but earlier it was here on Friday the 31st, and then boom, we could have, had you been watching that. Now, I was selling Bitcoin and over the weekend because I saw it on the daily was weakening. However, just using the dynamic average true range, going to exit mode here, and then boom, you would have been out and then potentially back in at 94 or 95K, went back to entry on the dynamic average true range. Okay. If you were short, let's say you were long in here, you can use the ATR as your short also. I'm sorry, your stop loss, forgive me. And, sometimes it does go through some chop. But if you were short over here and you wrote it down, typically you'd want to cover your short when you see that capitulation drop, when it gets that far away from and it just plummets. And then this is short covering. But also on the entry zone, we saw buyers coming back in. here. So you could have caught a nice pump on that. Just trading the average true range. It's still in entry mode on the 4 hour, kind of weakening a little bit, but I would wait till it gets above the 50 period EMA anyway. All right, let's see. Todd asks, so would the exit be the short entry point? No. No, no. So if this were the short entry, Todd, where it went exit, you would have been short and also below the 2150 period exponential moving average. And this was a nice little dump. Went sideways, sideways, and I love, well, I do miss shorting Bitcoin because, it'll do this. It'll go sideways, sideways. It'll slowly drift, and then it'll hit that 21 period exponential moving average, and then it'll drop again, and then it'll hit it again, and it'll drop again, and it'll just kind of say, all right, it's that drowning analogy you guys hear me talk about. The thin ice is the 21-day or 21 period EMA. The thick ice is the green one. So if you were short all the way down and you didn't cover your short here, you would have covered your short, your stop loss when it went to entry. So you would have shorted from 104K and covered at when went to entry here on a 96K. So 10K on the short with margin is pretty good. So hopefully that answers your question. Yeah, I mean, I would not put my stop losses or a short exit at the same as the entry price. Take some gains, maybe when the bear market comes back, if there's enough interest, maybe I'll relaunch Sniper Trader. But that's tricky business. It's easy to look at in hindsight, but these are the tools we use. And for you guys that are swing trading, more specifically on looking at daily charts, which is what I recommend. I got a number. I have 2 copies of that same study, I think. Yeah, I don't need both of those. On the daily charts, this is the monthly. We'll get to that. The IBIT. Let's see where I lost my daily chart on. But anyway, so let me do this. So Bitcoin, the 4 hour gives clues. So now technically we're still in this uptrending channel as we've redrawn it. We're waiting for the cycle low kind of end of February into March. So probably this will zigzag around a bit. And I don't think we break new highs until March, but maybe end of February. Some people were saying really fast and soon. I do have a graphic to share with you guys, and I shared with M3 the other day where we're right at the precipice of going vertical on a timing and pattern standpoint. To finish my point, you can often get early signals on this 4 hour that extend into the daily, but we can see we're just sandwiched between the buyers and sellers, and this is going to take a while to sort out. I don't see any easy path for Bitcoin from here. All right. On that note, by the way, if you haven't gone over and gotten your free trial, go ahead and do that. I don't know how long we're going to keep that up, by the way. It may not be here next week. So that link, just so you have it, go read about it at cryptomastery.org. There's lots of stuff to read about, and the 10 signals that I was just showing you, right? And guys, I haven't even asked for reviews and testimonials in 3 years, and there's dozens of them. I should probably ask you guys for more of them. In fact, I am gonna ask for you guys for more of them. Those of you in M3, any of you guys using Crypto Mastery indicators, do me a favor, drop me a little testimonial or review in the chat here, or you can DM me in Signal. Because, look, I think people probably need to know how impactful they've been for us. And you can go watch this video about that. But the free trial is just going to be an order page and like that. So put that in that chart. But you can read about the signals and everything else at cryptomastery.org. All right, because I know you guys don't write those things down, and then you'll ask me right at the end. You know who you are. All right, let's look at total market cap, and then we already kind of looked at this. Similarly, it's holding support at 3 trillion, thankfully. But we could still drift down on Bitcoin and come down on this range. We dipped into it briefly, but it's not looking terribly strong. If we look at the monthly chart of Bitcoin, last month's chart was bullish-ish. It was bullish engulfing, but we're kind of, I don't know, from a launch standpoint, or Arthur Hayes suggested coming back down to 70K. That is still on the table, and that would be a kind of 30% haircut. That happens in bull markets. and that would give it a launch pad to really push higher. I'm not suggesting that we do that, but we'll go back to the study in a minute because this is really where we're following the different paths here. But anyway, I want to look at the IBIT real quick, you guys. I know I'm jumping around a bit. The IBIT study, for those of you familiar, have been tracking this. The gap on the 4-hour IBIT, similar to the CME gaps, generally fill. We kind of gave up on this for a while because they weren't filling. Well, there's still these that haven't filled. But I don't know, you guys. That would be bad. All the way down here, that maybe in the bear market these will fill. But we're back to since those days to the 4-hour gaps on the IBIT. That's the IBIT is the BlackRock ETF. And the reason there are gaps is after markets close at 4 p.m. or weekends, price can, when it reopens, can sort of gap away from where it was, like the weekend. What I'm suggesting in the study that I came up with and saw, because no one else is talking about this, nobody, unless they learn it from me, is when these gaps happen, they tend to backfill. This gap came down and filled here. This gap filled pretty quickly. This gap filled here. This gap filled here. This gap filled here. This gap filled here. Isn't that interesting? This tiny little gap, you wouldn't have thought we would get back down here, but we just backfilled it. This gap filled in here. This sometimes gaps fill other gaps. This gap filled here. This gap filled here. We do have a gap here. No, this gap filled here. Okay, so look at that, you guys. We're back in business on this. And now the reasons for this, I'm speculating, but because they, like the banks, don't have to mark their losses, mark to market, or whatever it is, they can call it sort of they can carry the not impermanent loss. What's the phrase? And to carry it on the books for years and years, and then later they can kind of do it. Like CME, they don't have to take a loss right away. They're taking the other side of the trade, unrealized losses. Thank you, KS. I knew it was right at the tip of my tongue. So bottom line is though, they're taking the other side of these trades. So let's say on the iShares lost a bunch of money on the gap. Well, it's in their best interest to kind of work with the CME and the market mate to push price up to kind of where they can get even. That's my theory on this, because otherwise, why would all these gaps fill? I'd be curious to see in the next bear market, do we come down and fill these gaps? These big ones, that would be interesting. The little one, yeah, but for now, let's watch these 4-hour gaps. Now, all these gaps, actually, there's a new mini gap. This gap filled, but there's a new smaller gap within the gap here. So basically, we should push a little bit higher to fill this one at some point. It could be now, next week, next month, doesn't matter. And sometimes they're hard to spot. This one's hiding right in here. Okay. Interesting though, isn't it? You're like, all right, Brett, get on with it. All right, back to, let's see, you're coming up on the hour. This class is usually just about an hour, so I'll wrap things up. Our path to $150,000 Bitcoin and 200,000 Bitcoin, still kind of on path, on target. It's, this stretched out a bit, and I've been trying to kind of overlay it so it fits. But when we do break 111K, I think it's a quick push up. I think we do run right up to 148, 149K, maybe not quite 150 on this run. I think the people will dump right ahead of that round number. It's also the 2.618 Fibonacci here. And then we'll see a correction back into this 112K range to retest, maybe back to 100K, but we've done enough back testing 100K. I think, this 110 level, once it breaks out, will eventually retest. And then we've got some bear market summer lulls, and then push higher into the end of the year. That's what I'm thinking, up to 200K. This red line is the maybe still drop down to 70K as Arthur Hayes is proposing. I don't know, you guys. That would be, we would need some big scary catalyst like an alien landing or a meteor hitting Washington D.C. or something like that. And knock on wood, stranger things have happened. Clearly. So, and we are living in a simulation, apparently. So, who knows? Little green man could be running around any day now. These things would certainly tank the market. So I do recommend having stop losses and limit your positions. Don't have 15, 20 positions because, as you know, over the weekend, they're very hard to manage, if not impossible, when there's a market correction. So this is kind of my base case on what I think happens next. I'm not going to be buying. I have no Bitcoin right now. I sold it over the week, the last bit over the weekend, and I'm happy I did. And I bought some nice Solana at good prices. I'm not touching Bitcoin till it's above 110K on a closing basis, and I'm okay with that. I'll miss that move, but it's got to show me that it's got what it takes to keep going higher. And it probably will. I'm just being stubborn. But anyway, so on this daily chart, let's take a look at a few other things. If you want me to look at any coins, let me know now. Speak now or ever, forever hold your peace. Sol Dominance. Looky there. Hmm. That looks really good to me. Oh my God. All right, look, it's something we haven't talked about in a while, you guys. Look at that Bollinger Band pinching. When that thing pinches like that and you get that big wide pinch, that precedes usually a big move. I think Solana's about to have a big move. Let's see what else is going on. Oversold on Solana dominance. ETH dominance, ETH isn't there. Now Tether is ticking up. We've got to keep an eye on that study, and I'll pull that up because that got a little scary here yesterday. That's the canary in the coal mine, but we'll get to it. For now, now there's a little bit of resistance here. Let's just say I would like to know immediately when Sol dominance gets above 3.5%, because then I'm pretty heavily invested in Sol right now, but that's when I would go higher in that. Why is it all the way up there? I want it to be right over that little area there. Okay. And so Solana on the chart. We'll come back to the USDT dominance. Ondo's the only thing up today. Interesting. And so, the chart doesn't look terribly good, but it looked great over the weekend. How many of you bought some Sol when I suggested it? I know it was late Sunday night and you probably weren't paying attention, or you had your head in under the pillow during the bleed out and head in the sand, as it were. But I was suggesting that this circle I put out and said the buy zone, good for you, Dr. T, buy zone 175 to 200, and that thing, look at it, bounced up right out of that zone, and now we're up to 216. Solana coming, is riding this trend channel. Okay, so still in a nice upward trending channel here. And once it gets above those 21 and 50-day EMAs, you can see there's some resistance here, prior resistance here at 220. But God, I love trading Sol, you guys. It's been, some of you know, I nearly doubled my Sol holdings just trading out of these. Let me turn off the Bollinger Bands here for a minute. Out of the buy blocks down in this range. To turn 40 Sol into 90, just buying in these green boxes, selling into profits. And then again, back down in here, I bought some Sol and I sold it. I put my limit order at 245. So sold a little bit early. It had that big Trump pump, but I was still happy I took profits there at 245 because then what happened, then I've been buying all through here. Sol's going to keep going, you guys. It's a great tradable coin. Don't be married to these. I'd be selling my Solana at 260, 270, 280, 290, but not all of it. Don't sell all your Sol. You hear people say, do not sell your Bitcoin. I don't know about that, but Solana, remember the last cycle, I originally called it at $35 on August 1st, 2021 in the newsletter, and that thing shot up 600%. But we were selling it too early, waiting for those pullbacks that never came. So I would suggest having a core allocation of Solana that you just don't touch, like in your IRA. I'm not trading my IRA, my Sol IRA, and I'm all in Sol. Knock on wood. All right, there you go. But that's just me. Certainly, I'm trading it in here, taking profits when you have them, buying low in the buy blocks, let the price come to you. That's what we teach here in the signals. Crypto Mastery signals give us the edge to do that. All right, you know what, guys? I'm going to save the USDT dominance study for tomorrow in M3. Those of you who are not in M3 yet, go join it, and you won't be disappointed. I guarantee. I've never had anyone complain. I've only had people cancel M3 who had sort of financial difficulty or, and the markets have been difficult, but have always usually come back or indicated they wanted to come back. So check out moonstream.com/M3. Where is it? Over here, and read all about it. You also have access to me in a daily chat. Those of you who know here, and we got a lot of great traders in here, and there's me doing a cameo on video, right there in the studio, during that market dump. So, you may learn as much from these other people. Like, KS is here. A lot of great comments from him. Diogenes. Hopefully, I'm saying that right. Some really active traders that are always commenting, and really good stuff in here. Mike Paz is in there, and so the value of here is invaluable. Plus, coin picks. We were giving out coin picks on that dump on some pretty good ones. Let's take a look at those. So some of them. So INJ, I still like and was buying it through here. It dumped a little bit, but INJ, it's got support here. I bet you this holds right there. And we did 568% on INJ. If you guys were in Retire Rich when we first called it back in October of 23, I know I'm not trying to cherry pick. Not everything's done as well, but certainly at the right timing, that's when we do well. So I'm going to move this down. INJ, I'd still be buying here and selling in these zones. But Sol did very well. Stacks, a number of these have just kind of bled out, but they're not over. Ondo held up remarkably well. Look at that. It kind of held right in this range. And it's sort of been my nemesis. It'll go up and break out, and then it'll dump, and I think it's over, and then it'll run up again. So I don't know, you guys. Ondo got a dot chain link. Not the best chart. Filecoin got hammered, you guys, but look at this. If you guys know, some of you know what we've been targeting on Filecoin. That's all I'm gonna say about that. All right, other things, markets here. Anything you guys want to look at? Let me know. Otherwise, I'm gonna pack this in. XRP, I stopped out on XRP, and I don't know. I've never done well with XRP, you guys. So I'm just not really trading it. This was potentially a bull flag breakout, but I don't know what to make of this right now. I think that it's sort of had its move, and we'll see. I have an alert on this at $3.40. I'll buy into strength and price discovery zone. Otherwise, I'm not touching it. And there's a number of the other ones we've been watching over, but the markets, they need to kind of bottom out, wait for that mid-cycle low. A lot of these coins that we were looking at and liked just got hammered, and it's unfortunate. So it's just a matter of time before they kind of recover, hopefully. But I'm leaning towards the stronger coins that have, the more viability and potential for revenue and profits and customers, because apparently in business, I've heard that customers are good for business. Call me crazy. A lot of these projects are purely speculative, don't have customers' revenue or any of that, and stay away from those. Even if it has a great narrative, like the graph is the Google of blockchain. I've never done well with the graph. It's dead to me. I'll never touch it again. So anyway, let's see. Anything else we want to cover? I've got to leave. Some of this we do cover in more detail in the M3 Active Trader class, like this, one of my new market top studies that I've been working on. So kind of projecting the market top over here, September, October-ish, 2025, around $200,000 maybe. Other than that, that's all I have for you guys. I don't have anything. All right, you guys are going to sneak in some coins right at the end, as you always do. All right, I was about to wrap things up, you guys. All right, here we'll do Polkadot. That's a good one. So, but that's the futures. Sorry about that. And at some point, I'm going to be teaching. I got to learn it first. Those Coinbase futures, it's a little different animal. Polkadot would have been great to buy yesterday. Guys, use these buy blocks. I would not buy it here, though. It's likely to come back down. It's drifting back down. The trend is your friend. Draw these parallel trend channels is not hard. There you go. And, that's the trend until it isn't. Real easy. I'm not here teaching you guys Elliott waves, Fibonacci circles, and all these other crazy things that, excuse me, I have a hiccup, to make your eyes bleed there. So, Polkadot, I would buy at $3.90. Let's call it $4. And if you bought some, Todd, a good place to dollar cost average would be down at 4, crossing down $4. And they've got a great ecosystem. There's a great blockchain. And their Stella Swap and Moonbeam and all of that. If you're in Retire Rich, make sure you're here Thursday. Vadim's going to break it down because he was explaining this to me. I saw him in Jacksonville a couple weeks ago at an industry event, and he was explaining to me what's going on with Polkadot and Moonbeam and Stella Swap and that blockchain. This certainly is not we have not heard the last from Polkadot, and it's way off. This is 10x potential. You know, it's been up in the 55 region. You know, will it get there again? I think I don't know. It's got a it's not it doesn't have that sexy narrative yet. It was kind of new and there's novelty is huge for humans. So I don't know, but still we want to if we could be buying Polkadot in the $4 range and holding on to it, I'll be buying some in $4, I tell you. So that's all on that. Let's see, Fetch. Yeah, Fetch, you know, the whole scare with DeepSeek really kind of hurt all the AI tokens, and Fetch is still kind of in this process of moving over to the ASI token. I was encouraged by this over here, high or low, but it's not anymore. And but it is at least holding the 80 cent range. I think I would say it's reasonable to buy some Fetch here, but probably, you know, to have buy orders down at 60 cents down in here. We're just not questioning these buy blocks, guys. You know, if they come down to them, they fill and they bounce. And I'm not saying 100%, but we've been seeing a really high percentage of that happening, and enough that it's a no-brainer to take those trades. So if you like Fetch long term, and who wouldn't? I mean, it's ultimately it's got three great companies. You know, sometimes that's difficult though, trying to merge three corporate cultures, etc. But for now, I would be watching our signals and wait for ERIs and the TSI to go green. Any early signal, but now with our ERI Pro, we see there was a sell, big sell block, big sell pressure back in here. If it can hold 80 cents though, that's prior resistance, prior support, we'd want to see it hold here. But at these kind of, well, the volume isn't too low. Let's see. Any news? No real news. But yeah, crypto AI tokens crushed by DeepSeek fueled Nvidia sell-off. Thank you, China, for another wave of market selling. Enjoy your tariffs. But anyway, it's just it's so funny. It's really, I mean, maybe not and to the farmers, but so now China's saying, all right, well, we're not going to buy your soybeans then. It's like the school playground. Well, all right, well, we're just going to sell our soybeans to Russia then. It's like anyway, um, buying some here, I would say would be a good idea. I'd rather own it down here at 60 cents on Fetch or 57 cents. 57.50. You'd love that. I have an alert down there, 60 cents. So there you go. All right, you guys got to run. That's all for now. We'll see you in M3 Trader tomorrow. We'll unpack some more things, and you know, got to keep an eye on that USDT tether trades, tether dominance. That you know, I had suggested the other day that if we get this bounce right now in crypto, it could be short-lived and it could be a bull trap, because and that's kind of giving us those clues. If we can't break above this not 104K, you know, we got trouble. We're putting in lower highs on Bitcoin. You know, I don't know. I think Solana's still looking sad, but if Bitcoin dumps, everything's going to dump. Because if Bitcoin's dumping, total market cap is dumping, and that's kind of the danger here. And if late February, we got a lot of time before end of February, March, so the cycle low potentially down in this range, could we go down to 86K? We need to keep that in mind and have some powder dry, and I would suggest taking profits on any pumps here this week, you know, and have stop losses, because you know, if this were to bleed out down in this range, how much do you, this is the buy Black Friday bonanza sale zone, 86K area. Let me see the weekly. Not. Hmm. Interesting. No buy or sell blocks on the weekly at all. Oh, there it is. Okay, I thought that was strange. It just took a minute to pull that. So similarly, yeah, 84K. I had been saying 84K all the way back here. Also because it's the midpoint of this vector candle. And, you know, I don't know, you guys. Just, I would not be gung-ho, all in bullish and expecting new highs here. We don't know, but this could go either way. So well, let's unpack that tomorrow a bit more. All right, you guys. I will see you tomorrow on M3, and then Retire Rich for everyone else. Dr. T on Thursday, and we'll unpack that a little bit more. All right, you guys. Take care. Bye.